Tuesday, May 20th. The title, just so you're aware, was AI created. I am going to do more AI. I'm starting to use a lot more AI. You guys know I use AI for stocks. I am starting to use a lot more of it for this podcast, specifically the newsletter, the titles, things of that sort. So if you did click on clickbait, do not fret. It is just AI, but I will go over every topic that you see on there. And just so you know, I'll get this out of the way. If you listen to the first 2 minutes of yesterday's podcast, the first 2 minutes, you may have heard me say, we end higher. I was right in that realm. What I was wrong about was, I was wrong because I said I didn't think we got positive. And we did. It was a crazy day. And let me point out on TrendSpider right here, you're looking at the 4-hour algorithm. This is VOO. So this is just a buy and hold ETF in my mind. So I use the 4-hour algorithm to buy and hold. So when it told me to get in at 484 on April 23rd, I got in. When it told me to get in at 480, I got in. When it told me here to get in at 517, I got in. We're trading at 545 right now. Okay, hasn't triggered me again. The MACD, little bit extended. The RSI, 75. We are overbought. We are due for a pullback. So when I said yesterday, I thought we would see a pullback, this is where the Moody's downgrade come in. This is where retail bought the dip. So if you listen to the podcast in the first 2 minutes, and again, I release it at about 10 o'clock in the morning, I release it, and I thought it was great guidance, okay? Retail investors bought the dip. As per JP Morgan, retail investors bought $4.1 billion of stock within the first 3 hours of yesterday's market open. The two biggest stocks, Tesla and Palantir. Single stocks were 2.5 billion. So 60% of the purchases were significant single stocks. ETFs only comprised of 1.5 billion. Retail is stepping in. The big money, I don't think it's stepped in yet. Now, here's the thing. We talked about the Liberation Day strategy on QQQ. Yesterday, the Liberation Day strategy got a buy-in. Got a buy-in on VOO, the S&P 500, 546. You're trading at 545. Do you want to get in? It doesn't feel comfortable. I still think long-term AI is the play. If you want to do the 4-hour algorithm, the Liberation Day strategy wins 59% of the time over the last 9 years. Okay, because that's a weekly candle, and I go down to the 4-hour candle on the 4-hour algorithm. I don't like to go back 9 years. I like to back test it for 2 years because we're not in the same market as we were 9 years ago. Nvidia, if you bought it 9 years ago, you're doing fantastic. In the 4-hour algorithm, I want to avoid little dips like this. And that's what it does. You win 67% of the time on VOO in the 4-hour algorithm. Okay, we're extended. Like I said, the RSI is at 75. I think we're due for a pullback. But yesterday, retail stepped in. I still say we are in an AI market. And that's what you want to buy. You want to buy AI stocks. Like I said, Tesla and Palantir. Tesla, remember, I believe it's an AI stock. So retail is showing us they are willing to buy the dip. When you see a dip, you go and buy it. I think this is absolutely the key. The key is the 10-year. And you can see these rates, okay? Plus 5%, do not buy the stocks. They are going to continue to slide as the 10-year goes up. 4.5 to 4.75, it becomes a headwind. So you just want to look at the 10-year. If we go over here to the bonds, it's at 4.48. That is below this. Yesterday, when the day started, we were at 4.5. And that's the key. That's going to be the key. If you get up to 4.5, it's a little bit of a problem. And you want to keep an eye on the VIX, the volatility index. Yesterday, it was up 5%. But it started way up and then crashed down. So the VIX is the volatility index. As it goes up, stocks will go down. It wants to live between 19 and 20, 18 and 20, somewhere in that. It's at 18, okay? To come down, stocks will have to continue to go up. But I think we're going to get a pullback. And I'm not saying that yesterday's buy was bad. I'm just saying, for short term, you want to be a little more cautious. And I think this points it out perfectly. As you're close to that 4.5, you want to be cautious. So keep an eye on it. Jamie Dimon said yesterday the 21 PE that's currently on the S&P is too high. He is very conservative. Okay, I have bought PEs that are significantly higher than that. And the Fed is likely to wait and see. There's an old saying, don't fight the Fed. So when they start cutting, you want to buy. There was a lot of Fed talk yesterday. New York Fed Chair John Williams. It's not going to be that in June we're going to understand what's happening here or July. It's going to be a process of collecting data, getting a better picture, and watching things as they develop. The uncertainty of the tariff is going to be there in June as well. So don't expect the Fed to do a lot of cutting. But other reserve banks, Reserve Bank of Australia, they're cutting. So is it too late? I don't know. Other countries are cutting. We're not. And to the point that it's an AI market, Microsoft made a ton of AI announcements yesterday across GitHub, Copilot, Azure, AI Foundry, Windows, and more. They had their conference yesterday. Microsoft is a hot stock. Okay, it has rebounded. That gap up there between 398 and 423, that's a huge gap up. Expect it to come back and test it. So I would say for me, I'm not buying at 458. I'm not buying up in the upper range of this territory. And if anything, I'm looking to trim in the upper range of this territory. Because when I go over here and I looked at Microsoft, and again, I just did this channel. And this goes back to December 2023. And we've been in this channel and you've hit 450, 460 3 different times. And this is the third time. Does it reject or do we go through it? Now, the 4-hour algorithm on this one, it makes you about what buy and hold does over the last 24 months. 27 positions, you win 44% of the time. This, for me, is a buy and hold stock. But when it gets under 400, I want to buy it. When it's over 400, I want to be a little bit more cautious about my buys. The average Wall Street price target, 508. That's 10% of where we are today. Its valuation is stretched. The forward PE, 34. That means you are paying 34 times forward earnings that are estimated. And your growth, 14%. It's not bad. It's not the 5% that Apple has, but they're spending money. So when you look at this levered free cash flow, it's down 10%. Now you can analyze it with AI. I would say for stocks like this, you want both the fundamental and you want the technical. And the technical are the charts. Look at the MACD is still extended. It's up here 13 points above the oscillator. When's the last time it was 13 points above the oscillator? Not anytime recently, not on the 4-hour. I mean, you go back here and the last time it was 13 points above the oscillator. I mean, that's only 8 points above the oscillator. It is extremely hot right now. And AI, specifically Microsoft, because it lagged behind the other Mag 7, it's catching up. So it's just catching a bit. You want to make sure you have a strategy. One of the strategies I use, my 4-hour algorithm. So when it told me to buy at 385 and it was under 400 and I thought it was a good buy, I added to it. I also trimmed when it got to 410. But those are buys that I made back in the early 2000s. So I am significantly a buy and hold investor in the large mega caps. The Microsofts, the Amazons, the Apples, the Netflix. I've been a seller more of that one, but it's buy and hold. So if you want my 4-hour algorithm, you go over to Linktree, LINK. Now here's the thing. You can try out TrendSpider for 50 cents a day. Okay, $7 trials are back. What do you get when you sign up for an annual plan? Because that's a 14-day trial, 50 cents a day for the next 2 weeks. You don't get all of this when you sign up. You can use all these tools and take it for a test drive. Use my link in Linktree. You get, when you sign up for the annual, email me. You'll get all of my algorithms, including the 4-hour. You'll get all my custom watch lists. You'll get all this custom scanners that I developed. And there's going to be one scanner that you're going to want to stay around for. Okay, but you get all the great features of TrendSpider for 50 cents for the next 2 weeks. Sign up. This is the Memorial Day sale. Okay? Congrats to all of those that took the UnitedHealth trade. Congrats to everybody. The 4-hour algorithm got you in yesterday in the afternoon candle at 315. Where are you trading right now? 322. Does this algorithm work on this stock? Well, it loses you money over the last 2 years. That's the bad news. The good news is if you bought and held, you've lost 35% versus only losing 26%. Okay? The 4-hour algorithm does not work on this stock. You're going to have to find a different strategy to trade this stock, but it did get you in at 315. And the valuation of this one does make sense now. It's not overvalued. Personally, I'm staying out of it. It's about risk reward. It literally is about risk reward. And I think the trading zone is between 450 and 550. And if it gets back up to 450, I will take a look at it. Okay? That's just my thing. And remember how I said, if a company shuts down the world like CrowdStrike did, you want to invest in it. The lawsuits are moving forward. Delta Airlines is blaming CrowdStrike for all of their losses. They've got there's a ton of lawsuits here. Delta Airlines is part of a class action lawsuit against them from a bunch of passengers who said they didn't get refunds. Well, Delta Airlines is suing CrowdStrike over this. Has it affected CrowdStrike? Not really. I mean, CrowdStrike is like, hey, this is the cost of doing business. They're protected by their user agreement. So CrowdStrike at 440, I trimmed at 420. I cut half the position. Their earnings are coming up. It's incredibly expensive, 128 times forward earnings. But Delta, in my mind, is an absolute trade. It's a hold. Okay? But Delta is below halfway. Okay? Their 52-week high is 59. What does Wall Street think it's worth? 57. That's 13% of where you're trading today. And how would you trade it? Well, for me, I would trade it on the 4-hour algorithm. Why? Look at the performance. 143% over the last 24 months. 21 positions. Okay, buy and hold has made you 54%. Let's just update this from when the algorithm got you in. You are up 24%. But again, you're not above the 200-day. If you go to the daily, you're not above the 200-day. Expect that 53 to be a resistance, but I would expect this one to continue to move. It's a trade. I don't like buying airlines. But what's interesting about going over here, let's go over here to Delta. What's really interesting, I thought about this, and this is part of the rabbit hole of seeking alpha. But when I go over and I look at the airlines and I say, okay, Delta's ranked 14 out of 25 here. It's a hold in the quant. And then I go and look, and these ones, I don't really, these are all foreign, but Blade, BLDE. Okay, I find this one funny. It's a $277 million market cap, highly speculative, but they announced their first positive cash flow earnings just on May 12th. And when you look at it, it's up 33% in the last 1 month. Wall Street thinks that it's worth $7.20. That's 109% upside. And this is where Seeking Alpha will just lead you down rabbit holes. It's interesting. And what I like about Seeking Alpha is that you can get a 7-day free trial and $30 off. Go over to my link tree. Use the third link. We will talk about Alpha Picks in a little bit. That's where the bundle comes in. But the third link gets you a free 7-day trial of Seeking Alpha. And it's so good. Like yesterday, I was seeing Mullen, the meme stock Mullen. This was up 100% yesterday. No news. No news. Over 1 day, 100%. Now, if you want to do Mullen and you have TrendSpider, maybe you want to look at this. The 1 hour stock battle strategy that I created for when we did a stock battle, because this one had you buy in here and got out here. It doesn't have you in. But if you follow this strategy over the last 60 days, you're down 28%. If you just bought and held for the last 60 days, you're down 99%. But if you have TrendSpider and you just go to a 5-minute chart and you looked at yesterday and you used confirmation, and confirmation is simply, hey, am I over the 9-day EMA? I show you on my newsletter in the education section how to trade with confirmation. And these meme stocks that are up 100% in a day, you can absolutely trade that momentum. Like for instance, buy here at 26. Once it lost confirmation, sell at 29. Buy again at 32. Once it lost confirmation, sell at 42. You're watching charts, or you can set alerts. Again, trading in TrendSpider, I've done it a ton of times, and they are having a huge sale. Again, go over to my link tree, use the top link, 50 cents per day for the next 2 weeks. Huge. 7-day free trial. Oh, by the way, this is a great opportunity to get in. I don't know the dates of the launch, but I am part of the beta project where TrendSpider is actually going to use something called Sidekick. And what's Sidekick? It pulls all of TrendSpider's market and alert naked data to deliver. Basically, you're going to be able to tell it, hey, do you see anything on this chart? It's going to be able to do technical analysis for you. Now, again, it's in beta, and when it launches, it's going to be new, but it will be an absolute game changer. So get TrendSpider while it's still cheap, while it's still out there, and they haven't raised the price. Now, TrendSpider, let's just look at MicroStrategy, okay? And I'm going to put this on the screen a little bit larger so you can see it. This is the back-tested strategy of MicroStrategy in the 4-hour algorithm. And this is why you want a yearly subscription to TrendSpider through me, because you get this 4-hour algorithm. Now, we can see the chart. It got you in here at 296. And you can see the performance. I'm going to blow this one up again. Performance chart. This means that over the last 24.7 months, you made 2,315% versus 1,153%. This 1,153, that's buy and hold over the last 2 years. Okay, there are 21 positions. You win 43% of the time. The average win is 71%. This is MicroStrategy in my 4-hour algorithm. Now, would I be buying here? No. You want to know why? The average win is 71%. You're halfway through that. You're at 37%. So would I be buying here? Probably not. I would be waiting for some type of pullback that would get me in again. I would set the alert, and you can just go down to the entry and say, alert me when this happens. And even though there's not an official buy in this run, it will alert you the next time that it goes for the up move, the bullish move on the entry. So again, why do you want the 4-hour algorithm? Because of those opportunities that literally can pay back your yearly subscription, and there's no emotions. When it triggers you to buy, you just go in and buy. Now, when I used to trade, and I don't trade as much anymore, but I would literally sit there and look for what's called a 3-bar. Okay, go and Google a 3-bar reversal pattern. And it's a candlestick pattern that is highly, highly accurate. Well, TrendSpider built an indicator for it, and it reverses. Now, what I want is an actual scanner that will scan for stocks in the S&P, in the New York Stock Exchange that actually reverse like this. I am building it with TrendSpider. I am trying. I will share it with all the TrendSpider subscribers. Okay, that's one of the things that I like TrendSpider for. What else do I like it for? Relative performance. Relative performance indicator is their take on Investors Business Daily relative strength score and stock charts tech rank. Okay, two tools that have long been components in the system of many of the greatest traders and investors in the world. This is relative performance. And you can put it literally on your charts. Okay, I don't have it on mine. I use it every now and then. I put an alert in on stocks maybe that I want to buy that are on my watch list, and I get it. But I'll just show you. If you want to see it, and we show it, here, let me just do this, and we'll go and look. The Weinstein stage analysis, let's see, relative performance. You'll see it right there. Here's the relative performance. Oh, you can't see it because it's at the bottom. But the relative performance on MicroStrategy, it's significantly higher. Sorry, I always get messed up in TrendSpider when I have to take stuff off and add it on. That's why I typically don't mess with it while I'm live on the air. But it's simple and easy to do. I just hit the I button, and super simple. So I like the relative performance. Again, I don't use it every day. It's not in my standard. But there's also this. If you don't have Seeking Alpha, you can put the information right on your chart. I'm not going to do it again because it's there. But it's a simple indicator that you can do. And you can see it right here. It just puts the PE, includes sector, industry, earnings dates, values, EPS, revenue, relative performance, 52-week high, low, analyst estimates, PE ratio, dividend yield, management ownership. It includes it all on your charts. So again, it's a tool I use. I have Seeking Alpha. What else do I have? I have Alpha Picks. I told you we would talk about this. It's a data-driven portfolio that beats the S&P, 146% versus 49% during the same time. And they released a letter yesterday, a little note telling you Alpha Picks portfolio aims to maximize the potential for capital. It currently boasts 13 dividend stocks with an average yield of 2.12% versus VIG, which is at 1.88. VIG is Vanguard's growth. Okay, one investment approach for the future uncertainty is a barbell approach, which combines growth stocks and dividend-paying stocks. Alpha Picks has it. Now, if you want Alpha Picks, it's on Linktree. It is the fourth link down there. But I would guide you. Again, I would guide you towards the bundle. This saves you the most money. You get the Alpha Picks portfolio, which beats the S&P, and you get letters like this that include great analysis. Plus, you get Seeking Alpha Premium, and it saves you the most amount of money, over $159. It is a fantastic, fantastic bundle, and it comes from Seeking Alpha. Now, let's talk about buy and hold strategy. These are the best performing stocks in the S&P for the last 5, 10, 15, and 20. See what's number one for 5? It's SMCI. I still don't trust the company, but you can't argue with the performance. Nvidia is number 2. I have not held that one for 5 years. Okay, not quite. 10 years, Nvidia is number 1. AMD is number 2. That's huge. We'll go over that. Axon, which is a big one. Broadcom, Arista Networks, 15 years, Nvidia. And then there's Texas Pacific Land Corp, an energy stock. Pretty good. Nvidia and Netflix are the 20 years. And you want to know what's number 4 in the 20, which I have held for 20 years, is Apple. Apple. Okay? Amazon, which I've held for 20. I think I've held that one for 20. I may have sold out of that one, to be honest with you. But at least I've got one of them on this thing. Like I said yesterday, pick your winners and hold them. That is going to be the greatest source of wealth that you can have. And I said it yesterday in the newsletter. You can go back and read it if you'd like. And speaking of AMD, let's look at Nvidia versus AMD. This is an interesting look. Growth, Nvidia, 10 out of 10. AMD, 6.9. Quality, 10 out of 10. Nvidia. Valuation is the only one that actually equals. AMD is just not great. Look at the revenue growth, 56% in Nvidia. AMD, 23%. But when you get to the market cap of Nvidia versus AMD, AMD has a lot more room to grow. Okay? Doesn't mean that AMD is dead. It doesn't mean that at all. AMD, in fact, has a cup and handle pattern. And I posted it on Twitter. And you can go to my Twitter and look at it. Now, AMD, the 4-hour algorithm, got you in at 91. You're trading at 114. It's a solid stock. Again, AI is the play. But if you want to know what the play might be for both of these, it might be Taiwan Semi. The only thing, again, Warren Buffett bought Taiwan Semi, but he sold it at about, I think he sold it at about 90, 89. It's at 193, just a few years later. Okay? The issue is political. Under Biden, we would have automatically defended Taiwan. He said it. Under Trump, there's a lot more tension. And it doesn't mean that Trump wouldn't defend it. It's just there's a lot more tension. But you know what? Jensen Huang said yesterday, when asked, Taiwan Semi's raising their prices, he said, we'll pay whatever. That's pricing power. Taiwan Semi is the only one that can produce these chips. So that's why Taiwan Semi is in the core portfolio. The 4-hour algorithm, it doesn't work that well, but at least it makes you money. So if you're worried about losing money, stick with the 4-hour algorithm. It makes you 42%. It wins 46% of the time, 28 positions. So it wins 12 out of 28 times. That's better than blackjack. Average win, 8%. Got you in at 155. Boy, that was the time to buy because you're at 193. How much is this one? Well, look, you're up 25% in just 39 days. That's a great gain. Again, pricing power. And Jensen explained NVIDIA's Blackwell AI from front. This is how you know that NVIDIA is undervalued. He explained everything about NVIDIA's AI factory, an engineering marvel, from a blank silicon wafer at TSMC to gigawatt scale data centers like Stargate. Go and watch this little 5-minute video. And if you want to know a duh yesterday that we all should have known, Zim Shipping. Shares were up as much as 8% yesterday. It was duh. The shipping company up around 8%. Most likely it was based on the tariff war doing less damage than expected and ending sooner. That was just a duh. We should have known that. And Chris Camillo, who I go over all the time, he released this one. Okay? Salomon shoes. Salomon shoes. I wear Salomon shoes, trail runners. I forget which specific ones, but they're trail running shoes. I think Speed Cross is what I wear. I love them. And they're just picking up on social media right now. TikTok. Look at the trends. XT6 shoes. Salomon shoes. Look at the interest on trends on Google Trends. Okay? The stock is AS. Let's take a look at it. AS. Algorithm got you in here at $22. Now, here's the thing. Over the past 2 years, This particular stock, 15 months. It's an IPO, so it's only been out 15 months. Trades 15% of the time. The algorithm makes you 15 positions over 15 months. 123% versus 102% if you bought and held. Got you in at 22. Their earnings are coming up. This might be interesting. You're on pre-market, you're up 13%. Why? Earnings. He said it yesterday. Keep an eye on his Twitter. He posted yesterday, you're up 13%. If we go and look at AS over here, and we look at AS, it's a hold in the quant, raises their full year 2025 outlook despite macro uncertainty. This is the new on shoes. Now, it's expensive. It is incredibly expensive, trading 45 times forward earnings. But look at the growth, 17% year over year versus the sector at 2. It is number 7. Okay, you can look at the top one, PVH, but this is number 7. This is how you use the tools that you have. You find this one, and you say, oh, okay, Chris Camillo, he turned $60,000 into $6 million or $600 million, some crazy number by doing crap like this. And then you've got the tools to do it between Seeking Alpha and TrendSpider. And that's how you add them together. Now, one thing, this is bullish for Tesla. They use Grok and Microsoft as they will use Grok on Azure. Elon basically explained they are going to be the hyperscaler of the future. It's huge. It's huge. He is leading this space. Grok is one of the leading AIs. And it's bullish for Tesla. That's what I believe. And I think I posted in my profile, Elon posted something about the battery storage. Let's just go down here. Yeah, the battery storage, Colossal 2 will be the first gigawatt AI training supercluster. Power is the new oil. And this will be huge. So again, big for Tesla. Now, here's stocks that are 30% below their 52-week high. VRT, Power, the trading desk. I brought that one up. Square, I wouldn't touch it. Reddit, hey, if Google's training on their stuff, they're going to have to continue to pay Reddit. Qualcomm, we went over it yesterday. This is on Semiconductor. This is Micron. This is Merck. I wouldn't touch it. I don't like it. Groupon, Dexcom, which has the blood sugar monitor. That's a huge one. Deckers, which is shoes as well. Datadog, ASML, AMD, and Applied Materials. Again, they're 30% below their 52-week high. There may be opportunities in there. Go and research them. Use the tools that you have. If the tools that you have can't research it, go and think about getting some paid tools. But again, you don't have to pay for it. For years, I used free tools. Just understand what your system is. Now, here's 5 stocks that could be 10 baggers. HIMS. I have said it before. I want HIMS. I want it lower. Let's just look at this one. I don't like it at 62. I like it below 25, but I will take it anywhere in the 30s. Okay, the 4-hour algorithm makes you 327%, which I'm perfectly happy with, versus 484. This one I sold out at 50. I got nervous. I am not the greatest trader in the world. I got scared at 50. It's at 62 now. It's obviously a short squeeze, so that's the first one. And you know, you want to see the fundamentals of HIMS? Go and look at it. Its valuation is crazy. But its growth is also nuts. 85% revenue growth year over year. That is phenomenal. Now let's go to number 2, ASTS. Let's see if we have a strategy that works on this one in the 4-hour algorithm. It does. 331% versus 374% buy and hold. I'm happy with that. In a highly volatile stock, I'm perfectly happy with that. Over 24 months, there are 28 positions. Got you in here at 22. You're at 24. Now, let's look at it in Seeking Alpha, because it is expensive. Absolutely. Again, anything that has this type of growth is going to be incredibly expensive. Its price per sales, 1,225 times. That's huge, but its growth, 827% revenue growth year over year. But they're not making money. They're not making money. That's the problem. Okay? NBIS, I've brought this one up before. NBIS is one that I have on my watch list that I want to buy. Wall Street says it's a super strong buy. The quant says it's just a little bit crazy, but it's below its 52-week high. It's trading at 37. 52-week high is 50. And if we go over here and look at this one, again, I would argue you want to buy and hold this one. The algorithm got you in at 21. You're trading at 37. 6 positions over the last 7 months. Again, that fits all the criteria that I like. SoFi Technologies. Yes, it's expensive. Again, you will pay for the growth. The valuation, it's 49 times forward earnings. It's a bank. Sector median is 10. It's expensive. Its profitability, it's bad. It's not great, but their gross profit margin is 82%. Now, if you want a strategy to trade on this one, does the 4-hour algorithm work? Yes, 201% versus 154%. So while you're waiting for this one to actually grow into its valuation, you're trading it and you're making almost double. If you win 50% of the time, it's a coin flip. Okay, and number 5, AMD. We talked about AMD. I like it, but I like Nvidia better. Robinhood, they are disrupting things. I like this one. Catalar, I know nothing about it. Oscar Health, they are my insurance company. I brought them up before. Lemonade, I don't like them. There's another insurance company, Porch, that I'm going to bring up. Transmedics, we've talked about that one. That is one of the stocks that actually could turn $5,000 into $1 million. That's what Perplexity said. Again, this is a great threat, and this is what you want to look at. Now, Chris Camillo puts it really, really well here. The cheapest way to invest, just don't complicate it. He says his safe money is just in S&P tracking funds. My particular risk tolerance, by the way, and when you listen to this 55 seconds of how wealth management tries to overcomplicate things, I used Apple as my savings account. That was my high risk tolerance. I had people telling me, you're crazy, you're out of your mind, but that was my risk tolerance. Today at 54, looking back on it, I would probably tell 20-year-old me, go into VOO and QQQ. Why are you putting your money into Apple? Now, Apple turned out to be much better. But hindsight, risk versus reward, I was highly risky. And Chris goes over this. If you're paying a wealth manager to actually manage your stuff, go and look at what you're paying them. Go and look at what they're investing in. Go and look at their performance against VOO and QQQ. Because you may just be better putting your money into that and then getting a small YOLO fund and trading in and out of stocks. But again, you have to enjoy this. You have to enjoy this. And earnings are coming in good. Home Depot missed on earnings per share, but they beat on revenue. More importantly, they guided higher. And they were up 2%. They're up 1.88%. And the 4-hour algorithm, by the way, you bought in at 351. It's trading at 386. It's a $400 stock. So the economy is doing well. Home Depot put it up there. Tonight, and we can go over to Earnings Hub. Tonight, you have one of the core portfolio. It's Palo Alto Networks. I have said before, Palo Alto Networks, when it was trading down here at 160, I said it's a $200 stock. This is a cybersecurity. Nobody's cutting their cybersecurity. Any CTO is going to spend on cybersecurity. It's a $200 stock. Where's it trading right now? 194. I would rather see it go into earnings at 169, knowing that we could see a huge pop. But going into earnings at 194, am I trimming? I'm holding. I'm not even trimming. This is a long-term buy and hold for me. I like it. Has it worked out for me for long-term buy and hold? Nope. You can see right up there, 188 has been a line in the sand that it just has not been able to hold above. It has double topped here just over 200, but I like it. I do like it. Another one that we have after tomorrow morning is Target. Target and TJX. Okay, Target right here in Seeking Alpha, the earnings thing. Target scheduled to report following a strong report from rival Walmart. Walmart was good. Target, I don't shop there anymore. Social arbitrage. When I didn't shop there anymore, I got out. It was good that I got out. Okay, I got out at around the 150s. It's now trading at $97. I just don't like it. A stock that is trading upper left to bottom right, I don't like. Any trend line that you do in this stock, other than from April, where we had the Liberation Day rebound, I just don't like it. So I wouldn't go into this one. TJX, TJ Maxx, different story. Look, that's bottom left to upper right. That's a strong stock. Now, the 4-hour algorithm, it makes you about what you would make buy and hold, but it wins 57% of the time. And look at this one, March 19th. It almost timed the bottom. Hasn't gotten you out. Boy, 17% in 61 days right before earnings. Maybe it's worth holding off. One that's interesting is Zoom. Okay, Zoom Communications. They've got $7.8 billion on the balance sheet in cash. The growth is horrible. Horrible. Its growth is just, look, 3%. That's what Apple's growing at, but at least Apple, you have a ton more cash. That's why the price has been able to stay up. Every company subscribed during COVID. They can't get more companies to subscribe. But with $7.8 billion on the balance sheet, maybe this is a good one. Let's see how the 4-hour algorithm trades on this one. It makes you 13%. Buying and holding makes you 29%. It got you in at 70. I would much rather see people in at 70 than in here at 83. Look, the 200-day is still moving down, but the 50-day is moving up. If this is something that you subscribe to, maybe it makes sense. But I will tell you, what is the number one software stock? Again, if you go over to Zoom, let's just go over to Zoom. Because if you take Seeking Alpha and you say, okay, I'm interested in Zoom, well, let's look at the application software. The number one stock in application software, according to the quant, is AppLovin. Okay, it's lower than its 52-week high at 525. It's 22% off its Wall Street price target. The only ding against it is valuation, where it's trading at 45 times forward earnings. And you can analyze with AI right here. So if you want to know all the competitors, Unity Software, Meta, and Alphabet, you can go in and look at it. In summary, AppLovin showcases remarkable growth and profitability metrics coupled with robust stock momentum. This is written for you by AI. Okay, it was generated on 5/19 just yesterday. So it's a great tool. Again, it can lead you down things. I like AppLovin. If you go over here and you look at AppLovin, in the 4-hour algorithm, it makes you 1,587% versus 2,000% if you buy and hold. I would say buy and hold is great, but you know what? It wins 63% of the time. Over the last 24 months, it's gotten you in 63% of the time. Of 19 positions, you win. Your average win 40%. This particular one that got you in right here at 234, it is up 60%. Would I be buying now? I would wait for that MACD to reset. I would wait for the RSI to reset. They don't have earnings. It's Zoom that has earnings today. On a weekly basis, you are bottom left to upper right still. It's still a moving stock. So it's, again, these tools are there to help. Go over to Linktree and you can get TrendSpider. Again, 50 cents a day for a 14-day trial. You can get right here. It's the Memorial Day sale. 50 cents. You're getting premium for the same price as standard almost. That's it. $56 a month. And then you get the bundle, which is Alpha Picks and Premium together. And then, by the way, on Linktree, we are in a bull market. I still think we're in a bull market. Get Webull. Get a damn Webull account because you want to YOLO some of these plays. Okay, that's it for today. If you have any questions, hit me up. I'll talk to you tomorrow. Say bye.
Every morning I wake up to the sound of the the trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter.